Hey all, welcome to ShareTreck. What a day it had been yesterday. A total washout. We had Nasdaq losing around 2.68%. We also had S&P 500 losing around 2.3%. Things look real bad, and we are going to find out why. We'll also try to find out what's the likely price action today. Even though Fridays are always difficult due to option expiry, we'll get that. So let's get started. So today we are going to have the CPI data. It's going to be released at 8:30 a.m. At the time of recording here, it is 7:13 a.m. Because I'm trying my best to get this video released at or slightly before market open. So I won't be able to see and react to the CPI right now. But we are going to talk about our price action on the indices and everything with reference to the two possibilities for the CPI. Either it goes up or it goes down. So that's how we're going to tackle it. We're going to first start off by looking at news items, and then we'll proceed to look at Nasdaq and finally to the genomics. The first news item I have here comes from BNN Bloomberg. It says, "Don't be fooled by daily drama. The stock market is in a rut." This is exactly what I have been talking about. It says the choppiness and seemingly constant mid-session about faces are obscuring the bigger picture. The S&P 500 has been vacillating with roughly 100-point range over the past 2 weeks. It has stayed above 4050 since the end of May and pushed over 4160 earlier this week, a level that it's had difficulty sustaining. It was around 4117 on Wednesday afternoon in New York. So the way we have been looking at it is we have been looking at select genomic shares, and we have been plotting a range within they have been moving. And we have identified some swing trades and some day trading possibilities. Of course, they are very risky, but we did identify this phenomenon. So this was the first news article I wanted to talk to you about. Here we have another piece of information. The Dow Jones survey revealed that economists are anticipating an 8.3% increase in the main CPI and 5.9% increase in the core CPI. Core CPI excludes food and energy prices, and these are all year-over-year increases. Also, gas prices are very close to touch a record average of $5 a gallon in the US, and this is going to cause a lot of political problems for Joe Biden, and it's being felt by the people. So midterm elections are going to be impacted by this if it's not handled properly. And it here says this persistent uptrend, which has a strong hand in pushing up inflation, is expected to remain high due to the sanctions on Russia. Now, it's creating a difficult choice for Biden and his administration. If you remove the sanctions, Russia is going to have a lot of money, and it's going to continue its pursuit against Ukraine and potentially other countries in the region. But if the sanctions continue, US is going to suffer this $5 a gallon average or even more, and that's going to hurt political prospects. And even with the sanctions in place, Russia has been able to sneak food across and oil across to Asian countries for discount. And even the discounted price is higher than what Russia used to get before, because oil is at an all-time high right now. And even though Russians are discounting their oil to sell it to other countries, it is still way above what Russia was used to. So literally the sanction is not having the bite that it is supposed to have. And I think the world is at an edge of what to do with Russia. So until the Russia-Ukraine crisis is solved, we are going to have this inflation issue driven by gas as well as wheat. So that's my takeaway from this news article. The Wall Street Journal here says that markets are on edge waiting for Friday's inflation figures. Investors don't want to get caught out by a surprise. So trading before the data release has been light, with US stock futures, benchmark bond yields, and the dollar little changed early Friday. Economists surveyed by the Wall Street Journal expect the consumer price index rose 8.3% in May from the same month a year ago and near a 4-decade high. So this is the Wall Street Journal's survey as compared to the Dow Jones survey. So we have some expectations in the market, and at 8:30 a.m., the Labor Department is set to release the inflation figures, 8:30 a.m. Eastern Time. And that's when the markets will get a real clue. Right now, everyone is holding their powder, waiting for the CPI release. I personally think that the CPI would have gone down. It would have gone down because there are many companies like Target, Home Depot, Walmart, Costco, they all had record high inflation. Remember, I showed you a chart, I think a couple of weeks ago in one of my special videos where I was talking about overstocking. So those companies, those big box stores had overstocked and they had obsolete stock. So they are selling it at bargain discount prices. Therefore, I think that that's going to have a mildly dampening effect overall on the consumer price index. And we'll see what happens at 8:30. Hopefully, if we are right, then we can see markets edge up. If we are wrong, then we can see the markets go down. We'll find it all out today. And of course, we are going to have the effect of option expiry. Probably some people took action on Thursday itself to mitigate it. So we'll have to see the quantum of option expiry effects on the markets today. That's another news item out here in stockmarket.com. DD Global to be delisted from New York Stock Exchange today. That is the 10th of June. So that is one of the first Chinese companies listed here to be going away. We'll have to watch this space to see what happens next because it has the capability to move the markets. We have a constant tiff going on between US and China. It's possible that this is the beginning of a series of departures of Chinese companies from New York Stock Exchange. And it can have implications on the EV market sector because there are a lot of Chinese companies in the EV market sector. And also we have a big company, Alibaba. We'll have to see what happens going forward. This is another area where we have to keep an eye. So that brings me to the end of the news roundup. There is not much about CRISPR today. With this, let's go and have a look at Nasdaq and other indices as well as crypto and gold and see what's happening there. Let's start off with the futures. Our Nasdaq futures are looking positive. I think Nasdaq futures is kind of reflecting my own personal view that inflation is likely to be less. I could be wrong because I don't have all the data. And even if I had the data, I don't think my mind can wrap around the huge numbers that we are talking about and the overall interrelationship between various numbers. So we're going to wait for the market to decide for us. And I'm thinking that if CPI numbers were lower, which is what it's likely to be in my opinion, then we are going to see the market go up, which is a no-brainer. And I think the futures, Nasdaq futures are thinking either that, or they are thinking that after a beating today, there'll be a dead cat bounce tomorrow. So we'll have to see what happens when the market opens. Meanwhile, let's go and have a look at the indicators. In the indicators, I want to go to US oil first. US oil is steadily rising. You can see that it is following the line of support that we have here for a bull channel. MACD is also bullish. Momentum is also above average and picking up. It's approaching the overbought zone, but it is not there yet. So there is a little more fuel left in the US oil tank. And there could be more gains today before we start making a turnaround. We are also quickly approaching a level which in the past has seen us being pushed back. And that level is 125.27. I'm going to fine tune it a little bit. If you bear with me, I'm going to bring it a little down out here. To be precise, we have spiked above that, but we always come down below it. So we don't have much of a gap from here. We got 122.47 and 124.71. So there is just a $2 to be gained. And now the risk and reward is being skewed in the direction of risks. I'm thinking that if I was invested in oil, this is the point at which I would like to get off the train and wait for it to come back down again. That's what it has done in the past. And if you scroll back, we are at an all-time high for oil for the longest time that we can see since 2012. So this is a critical point. Those who are trading in oil have to do some analysis and come up with a strategy for how they think they are going to handle this impending resistance, which is coming at us at 124.71. Right now, the market is showing oil at 122.37. That said, I would like to next look at our VIX. This is the live VIX that we have today, and this is the 10th June candle. It has gone up. It's being pushed down by the 9-day exponential moving average and the 20-day exponential moving, 9-day and the 50-day exponential moving average. These two lines here, the orange one and the fluorescent blue one. And it has also got a hard stop at 27.20. So we have to watch what happens out here. I'm thinking 27.20 is likely to give a good resistance, provided our CPI doesn't come out bad. If CPI comes out bad, then we are likely to spike as far as the VIX is concerned. I'm going to draw a trend line out here. If you look at this trend line, you can see I got 1, 2, 3 contact points. So we are already above this diagonal line of resistance today. We can provide a little bit of margin for error because I could have put this line somewhere else, maybe slightly above. So I'm going to be looking forward to see what happens with the VIX today. I want it to come down. It will come down provided we have good CPI data. Out here, we can see that the MACD is bearish, but tending towards the signal line, attempting to cross over to the bullish side, whereas the momentum is still below average and pointed upwards. The momentum seems to be improving. That gives me a bit of worry that we might end up seeing the MACD cross over the signal line and become bullish, in which case this can go ballistic. It will likely break through 27.20. So all eyes are going to be on the CPI index today, and we'll get to know what happens there. If we look at put-call ratio, yesterday we went towards the bearish side, and I bet today also we are likely to push forward into the bearish side if the CPI goes bad. Otherwise, we'll probably come down, and we'd have felt that the market would feel that the inflation has peaked if CPI goes down. And if inflation has peaked, that would mean that the Fed is going to be more measured in their outlook and in their tone. And therefore, the market will take a breather and go to the next level of consolidation, awaiting the other risks to be mitigated one by one, which is the Russia-Ukraine issue, the supply chain issue, the Chinese lockdown issue, and other things which are now in the back burner while we look at the Fed and the CPI and the interest rates. Next, let's go on and have a look at the US dollar index and see what the US dollar index is telling us. US dollar index is telling us that the market is in a mood to bring money back into US dollars. And I can also see a cup and handle pattern beginning to form. We have formed a cup. We'll have to see if we're going to make a handle, which is a very bullish sign, which means that stock market is likely to be in for a lot of pain. So today, what we need to see is whether the CPI data comes in and pushes the US dollar index down. We have the MACD, which is already bullish, and the momentum, which is above average but slightly flat. So it doesn't give a clue where it's going to go, but it does look dangerous at this point of time. This would mean that our gold and Bitcoin prices would have dropped. We'll check that out as we go ahead. 10-year yields are coming down. When the yields go up, it is better for the stock market. When they go down, it's not good. And that's the reason why I would be worried about the 10-year yield the way it is at this point of time. And if we go on to have a look at QQQ, we can see that pre-market, it is showing a positive of 0.32. So probably the market feels the way I do, that we are going to get some positive news on the CPI. The CPI is either going to be flat or it's going to be down slightly, indicating that we have crossed the peak. And I strongly believe it, as I mentioned, is because of the excessive inventory that was sold on sales by big box stores. So that's going to definitely have a dent out there. And if you look at the QQQ, yesterday we fell below our line of support. So what I'm going to do is there were only 2 points of support out there. It was not going to be that strong. So I'm going to move it around here and create a new support here and see if this new support can hold. If it doesn't hold, then we'll revisit this again. We are just putting it here as a placeholder for the time being. Nasdaq pre-market seems to be positive, and it's around 7:37 a.m. If this positiveness persists, and if at 8:30 we get a positive CPI surprise, that CPI has gone down or stayed flat, this is going to persist and we'll have a good day in the market. Otherwise, it is curtain down. Let's look at S&P 500 and see what those market participants are thinking. Again, for S&P 500, we have the same situation. We have fallen down. We had 1, 2, 3 touch points, almost 4 touch points out here. It was a strong line which has been broken, and that worries me. We can see that the MACD is tending towards the signal line. Even though it is bullish, it is trying to go bearish. And we have momentum that has fallen and it's below average and pointed downwards. That's not a good sign. So S&P pre-market is up 0.05%. So probably the participants in S&P 500 do not feel the same way like Nasdaq does, and that gives us a mixed signal out here. Going back to QQQ, we can see that we dropped yesterday below this line of support, which was for us at around 302.95. So I'm going to convert this into a resistance, and we are banking on this line of support holding for us. If not, our next line of support is 292.96, which is out here, this green line out here. And if we zoom out and if we look at where we have been with regarding to Nasdaq, I'm taking the measurement tool and I'm going to measure from the peak that we had, which was around 409, and come all the way down to where we are here today at around 299. Let us go to 300. 300 is where we are today, 300.10 pre-market. So that's a drop of minus 27.14%. So we are already in bear territory and we have dug deeper. So right now, I think we are looking for some good news, and hopefully the CPI delivers that for us today. When we look at crypto, we can see that Bitcoin is down minus 0.54%. It still has got support here at 28,993, which seems to be a strong support that has held off all declines. MACD is still bullish, but tending towards the signal line, but momentum leaves much to be desired. And when you look at gold, we can see that gold is down minus 0.68%. It has gone down below the support line of 1841. So I'm going to mark this as red. And all this money has gone back into the US dollar index. Action will happen after the CPI is released at 8:30 today. With that said, let's go and look at our genomic stocks. Well, we have the genomic shares out here on the right panel. You can see that I have sorted them out so that our best shares are on the top. The winner is Bluebird from yesterday. It was up 3.32%, but as you can see today, there is no trades out there. So people are still waiting to see what's going to happen. And I'm going to switch back to my favorite view, that is the daily candles. And you can see that we have a doji candle out here for yesterday, and it is stopped just below our line of resistance out here for this range bound action. It's at 3.89. We ended at 3.73. So we have movement above here to move. Our MACD is bullish. Our momentum is also above average and slightly pointed up. So that is a good prospect for Bluebird to still continue moving up, provided we get some news from the FDA External Advisory Group, which is reviewing the data for Beti-cel. If any positive news comes today, maybe during the day or after hours, then Monday is going to see Bluebird go up. So watch Bluebird very carefully. Constantly Google for news on Bluebird so that you can be the early bird to catch the upswing. With that said, none of these shares out here have any positive open. The only one which has a positive pre-market is DNA, which was the worst performing stock, genomic stock in our watch list as of yesterday. Only DNA is up 0.32%. That's around 1 cent, because it was the worst performer from our watch list of genomic stocks yesterday, dropping a solid 13%. So that said, if you look at Invitae, it is down minus 0.75%. Verve didn't have any trades. Teladoc is down minus 0.66% pre-market. Beam doesn't have any pre-market trades. ArcG has no pre-market trades. Vertex has no pre-market trades. Regeneron, none. Editas has no pre-market trades. IDNA has no pre-market trades. Illumina is down minus 4.22% pre-market. Caribou Biosciences is down minus 11.70% pre-market. PACB has no pre-market trades. Intelia has no pre-market trades. IMTX, none. PFE has got a negative 0.41% drop in pre-market trades. So it's down 21 cents. CRISPR Therapeutics has no pre-market trades. and Novartis is down minus 1.02% pre-market. So you can see that even though Nasdaq doesn't seem as pessimistic about CPI when you look at QQQ, our corner here in the genomics is heavily pessimistic. Most of them either have no trades or are negative pre-market. Therefore, the bounce, if it comes when CPI is declared to be either neutral or slightly low, if that happens, then the genomic shares can really gain very fast, especially the ones that lost a lot, like DNA, which lost 13%. So anyone between 13% to around 5% of loss is going to see much stronger gains, and the others are likely to be following them behind. That is in case the CPI numbers comes out better. If the CPI numbers come out worse, then what's going to happen is the ones which have suffered the biggest losses yesterday, 13% to 5%, are likely to lose less, but the ones which suffered less losses yesterday are likely to lead the pack in going down. That's the way I look at the market action for today. Here is a press release that says that Bluebird Bio says FDA Advisory Committee backs approval of Beti-cel gene therapy for metabolic disorder. So this is a blockbuster news. Of course, we have to wait for FDA to formally announce the approval, which could take somewhere between August and September of this year, as I mentioned in my earlier videos. But this is great news. That being said, I would like to bring this video to its conclusion. We are trying to keep the video short. We are trying to publish this before the market opens so that it can be of some benefit to add to your own research. You can have a different point of view to contrast and compare. That's the objective. Please let me know if you like this format, because this is what I'm aiming to do going forward to the best of my ability. And if you like this video, please don't forget to put a like there so that YouTube can expose our channel to more people and we can be discovered. And also, if you have not yet subscribed, please subscribe. It's absolutely free. Join us and help us grow this channel for everything related to CRISPR and the stock market. Thanks and have a great day. Bye for now.